I think that's actually one of the transformational parts that's going to come to change the payments landscape going forward. But I'll touch on to that in a little bit. I mean, just to go back a step, I mean, we've been in payments, I've been in payments for about 20 years now, and for the most part, payments was boring business, so to speak, dominated by large companies with very large capital-intensive implementations. Scale was the name of the game. Infrastructure, massive infrastructures to handle multiple products. Products beginning to look more and more like the next one. So differentiation not really there. So it was really an industry just to handle the exchange of money. A little bit more advanced than the exchange by hand and cash, but that's what the name of the game was. And this is now a snapshot. This I took from a venture capital company that tracks venture capital CB Insights. Oops. I'm not sure about that. And this actually is a fairly recent snapshot of what venture capital investment in the area of payments looks like currently. And you can see a whole set of subsets in payments, whether it is transfer, forex, payments, and et cetera. So you can see how the picture has changed over the last several years. The question, why? How did this change? How did this change come about? And really, it came about because of these companies. It's a little slow moving, this one. I mean, at the end of the day, we've mentioned it time and time again in the course of the last couple of days. We've even coined a new word for it, GAFA, which stands for Google, Apple, Facebook, and Amazon. These guys have really transformed the landscape of pretty much everything that we live in today. And they have actually had a humongous effect on the world of payments as well. I've also put in there a couple of other companies, because specifically in the world of payments, Alipay and PayPal have actually played quite a phenomenal role in transforming the way we transact, and they're going to play an even more important role going forward in how we transact. But suffice it to say, I mean, just to give you an idea how dominant these companies are, I read somewhere a couple of statistics. I think Google is kind of a no-brainer. 90%, 95% of all internet searches are now centralized on Google. I mean, that's just phenomenal. The amount of data that is controlled by that company is just unbelievable. What I didn't quite realize until I saw it was that 16% of all online time across the world is spent on Facebook. That's also how pervasive this company is. Apple, with the introduction of the iPhone, essentially changed the way devices affected our lives and gave birth to a whole score of different payment companies, such as Square, and all of which enabled a lot of merchants to take electronic transactions, to accept electronic transactions that were never able to before. Amazon, the way it created a marketplace and in the process annihilated millions of small businesses or large-scale businesses that couldn't cope. So these companies have actually placed themselves at the crossroads of money, commerce, and payments in a way that nobody could have foreseen. They have opened the floodgates. It's not that they themselves have actually been innovative directly in the world of payments. They've tried to. We've had Google Wallet, we've had Apple Pay, and PayPal obviously being a wallet themselves. But their innovations in payments directly have not been that transformational. but their business models and the way they changed that, the way the world conducts itself, that's what brought about the transformation, and that's what brought about that's what opened the floodgates for innovation to take place in the world of payments, which has transformed so many of our other everyday activities. And I'll give you a couple more examples along the way. What I'm trying to do here is kind of give you a breakdown of the various evolutionary stages, I would call them, in terms of payments. I have grouped it in 4 different types. Enablement is one type. And that enablement is, generally speaking, where you actually take a cash-based activity and transform it by bringing it into the electronic forum. And they don't necessarily follow through each other sequentially. You can still find a lot of different innovations in all these 4 areas. But there's a couple of really interesting examples that one can talk about. Square, I just mentioned a little while ago, how Square targeted merchants that were unbankable in many respects by the traditional financial institutions up until that point. They wouldn't open a merchant banking account for them. Square came through, and with a very simple process, with much lower barrier to entry, enabled millions of people to actually take electronic transactions as the form of payment. M-Pesa, not sure how many of you are familiar with that. M-Pesa was launched actually by a Vodafone joint venture in Kenya as a mobile banking initiative in an emerging market where the vast majority of the economy of the consumers were actually totally unbanked. But they were actually in possession of mobile phones. The rate of increase of mobile phones was much larger than the rate of banking increase. So the M-Pesa initiative enabled people that had mobile phones to actually transact, get involved in financial activity. To give you an understanding of the extent that M-Pesa, the influence that M-Pesa has had on the Kenyan economy, something like 25% of the GDP of the country flows through the M-Pesa banking system. It's an amazing phenomenon. And to top it off, because we're talking about innovation, one of the topics here was how do you bring innovation to the country, to Cyprus. M-Pesa actually has sparked off an innovation revolution in Kenya and in Nairobi. And Nairobi is actually considered now a hub for innovation for mobile banking. Mobile banking startups that are going to the world are starting up in Kenya, largely because of the M-Pesa initiative. Next step, the next evolutionary step, I will say, is kind of incremental to the first step, and it's an improvement process. And we've seen it, we've felt it in our everyday lives in a number of different ways, introducing chip into our plastic cards to increase security, introducing loyalty so that you can improve the customer retention and the customer revisits to a merchant institution. It's an evolutionary process, but it adds to the enablement. Differentiation is then the next level of evolution, and there are again a couple of different examples. How do you actually tie more activities together in order to generate financial activity? I put there as one example to share with you, just to give you an idea of how these things move and progress. Klarna, I'm not sure if you're familiar with Klarna. It's a Swedish company, actually, that focuses on electronic commerce. But what they did was they differentiated themselves by flipping the e-commerce transaction on its head. What they did, they went to e-commerce merchants, tackled one of their biggest challenges, which was fraud. and chargeback rates. So what they did, they said, if you accept Klarna as a payment method for us, then what we will do, we will vet the consumer for you. And if we accept that consumer to take that transaction, we take the entire risk upon us. So the merchant pays a little bit higher fee than the traditional Visa or MasterCard fee, but he is guaranteed payment by Klarna, zero fraud, zero chargebacks. It does not have to concern with themselves with that risk. Klarna then came in and differentiated themselves by putting really a state-of-the-art fraud monitoring mechanism, a state-of-the-art vetting mechanism for approval of clients, and they are one of Sweden's best-known unicorns now, and they've just opened in the US, and they are really making a lot of waves because of the way they have turned the business model around. The last stage is transformation, and actually, this is where we are currently. This is the stage that we are currently seeing a lot of activity, and it's getting quite interesting, and it blends payments with a lot of other activities, putting it in the background, making it almost invisible, I would say, but actually an integral part of that activity that we're seeing. And I've given you a couple of examples there for reference. I mean, Uber being a classic one. Probably some of you have already used Uber. You've seen the fancy app. You've seen how the process of ride-sharing or calling a taxi in a country or city you've never been in, and how they take all that headache away from you. You see the screen, you see the little taxis going around. You don't even think that there's a payment process going on. Somewhere in the background, Stripe is handling the payment mechanism for Uber, and you don't even think it. It's a payment transaction, but it hasn't even occurred to you that it's a payment transaction. Amazon Echo, I mean, actually Google Assistant, the gentleman from Google probably didn't say it very in this way at all, but I bet you that Google Assistant is gonna lead you and prompt you into a payment sooner than you think. That's how it's gonna, that's the name of the game. I mean, Amazon Echo, classic example. They've already, I don't know if you're familiar with Amazon Echo. It's a device which has AI technology embedded into it. You talk to it, and it responds back to you, much like Siri, I guess, is trying to respond to you on a mobile phone. But, you know, you talk to it, you're asking about the weather. Before you know it, you're going to book your next trip using Amazon Echo with Kayak probably in the middle, enabling the transaction. The transaction is in there. That's how people will make the money. That's how financial activity will happen. But it goes in the background, it becomes invisible, and it is part of a wider integrated process that involves a lot of other activities around it. Wearables. And we've now seen wearables coming into the foray in Cyprus as well. I've seen advertisements about bands. I think one of the banks here is already launching wearable bands. Again, the transaction is in the background. It has become part of a fashion statement. It has become part of a different approach to things. But ultimately, the financial activity that's going to support this exercise is the payment transaction hidden behind it. And that's how payments are moving over the last few years, and especially how they're going to move forward over the next few years. And they're going to change the way we conduct business fundamentally. At least that's my view. I'm going to take a look at some of the trends surrounding that, because obviously there are a number of different trends that are all involved in part of this, in creating this perfect storm for payments, if you will. Some of them, I think, are pretty self-explanatory. I've listed about 4 technology elements here that are moving forward. AI, kind of like soup du jour these days. everywhere you turn, you hear about AI, you hear about machine learning. And really, there's a lot of activity involved in these areas. And payments actually is traditionally, or has been over the last couple of years, one of the areas where a lot of companies have put a lot of emphasis in trying to utilize these technologies in a number of different ways. Big data, also because as the transactions, as more parties are involved in these transactions, and as you see much more integrated activity, swaths of data are being generated. A transaction 10 years ago used to contain, an ISO 8583 message. For those of you that are familiar with the terminology, a string of data, very simple stuff, 250 fields or something, numbers, that was all. Nowadays, the same transaction, it could generate megabytes of data. It's what merchant you've bought it, where that merchant is, what time you've bought it, how you've bought it, how many other elements that transaction consisted of, swaths of data that are part of that transaction. All of that data is now analyzed in a very different way, and it's trying to profile you. It's trying to predict your next purchase. It's trying to predict what you're going to do with your life. And AI and machine learning are being utilized in order to analyze all of that activity in a meaningful and beneficial way. Blockchain is another element that's coming in, and it's actually still quite experimental from what I know, but already there's a number of different initiatives on how to deploy blockchain in an efficient way and in the transactional space. There are still, from what I understand, some scaling challenges because the current infrastructure that we have supports billions and billions of transactions on a daily basis. Blockchain is yet a tiny ecosystem. It has to prove its scalability first before it is deployed. But as a technology for achieving a real-time exchange, it's actually a very interesting proposition that a lot of people are considering and a lot of people are looking at various solutions. Trends is something quite important, and again, we hear a lot about this. I mean, Internet of Things. Internet of Things may not be directly, payments may not be the first thing that comes to mind, but think of it this way. A lot of the things that are going to be connected are going to be payment-driven as well, because they will generate a lot of data, yeah, but a lot of those devices will be prompting you to make a purchase. You can bet. That's the way people are going to generate financial activity. Internet of Cars. We've been talking a lot about, or we've been reading a lot about driverless cars. We've seen the big companies, Apple and Google, venturing into driverless cars. We haven't really heard about payment through cars. But it's already out there. Just a couple of weeks ago, I think GM announced a strategic partnership with IBM using IBM Watson technology to implement on the dashboard a wallet that would potentially, one of the first applications for a wallet would be, it would contact the fuel pump, activate the fuel pump, and allow you to enable and to complete the transaction from your dashboard. If you think about it, it actually addresses a very big chunk of the value chain. It can potentially drive the cost of paying at the pump significantly down. You could remove all of those card accepting devices and cash accepting devices at fuel stations and make it a much more lean and efficient activity. And that's coming. And my bet is that that's actually going to come faster than driverless cars, because actually it's a much simpler implementation rather than driverless cars with all the challenges and regulatory challenges that that activity is gonna bring. Contextual commerce is another activity that's coming sooner than we think, meaning there will be activities where they will have an interactive process with the consumer and in the way make certain recommendations to them. I've already seen a couple of examples. North Face, one of the premium brands for leisure wear, is already gone live with such an implementation. What they do, they have actually an AI-based solution, so going back to technology, AI-based solution that walks you through, profiles you in terms of what you like to wear and what activities you like to do, and recommends your next purchase. That's the context, that's contextual commerce. Another activity is instant payments, and actually instant payments is a trend that's very interesting and very disruptive in a way, because what instant payments implies is that the instantaneous exchange of the value between the consumer and the merchant. Currently, when you pay at a merchant, yes, I mean your value, the value of the transaction is immediately deducted from the consumer, but the merchant is not compensated instantaneously. That transaction has a lag time. Sometimes, if you're quite efficient one day, it could take a week. It could even take more than a week, depending on the size and influence of the merchant within they are acquiring the relationship. Now that we have actually seen contactless being deployed to a massive scale across the world, and we've seen some major markets going contactless, taking contactless to the mainstream. In the UK now, 2 years ago, contactless was zero practically in the UK. The space of the last 2 years, 25% of transactions in the UK are contactless. What does that mean? That means that the infrastructure, the traditional infrastructure that one uses to perform a transaction, has gone contactless. When the implication is that when you've gone contactless, you have actually allowed the phone or any other type of device to communicate with that established infrastructure. If that is already taking place without the need to replace the infrastructure, then the next logical step would be, what payment instrument are you using within that device, the mobile phone in this case, to perform your transaction? Up until now, it was our payment card. It would be your Visa card, your MasterCard, your Amex, whatever instrument you link to your mobile phone to perform the transaction. But now, it doesn't have to be going forward. It could be your current account. Where do you keep your money? You keep your money in your bank, in your current account. You could potentially be linking your current account into your mobile phone, using the existing infrastructure, bypassing the scheme rails. Scheme meaning Visa, MasterCard, Amex. That has a very disruptive connotation to it, because the way commerce is conducted could change substantially without needing to replace the infrastructure. And there are already a number of different initiatives that are going on in the world right now in instant payments, and you can see that there's important steps being taken. I mean, just to demonstrate how serious some of these players are taking this, one of the most recent transactions in the payment space has been the acquisition of Vocalink in the UK by MasterCard. Vocalink is the company that handles 90% of direct debit transactions, salary transfers, and ACH transfers in the UK. So every non-card related money transfer in the UK goes through Vocalink practically. MasterCard saw that threat coming. They bought that company off the banks for £1 billion about 2 months ago. Why? I'm guessing because they see the trend coming and they want to be part of that trend. They don't want to be sitting on the other side of the fence watching their market share being eroded. So this is certainly one of the bigger trends in my mind. As all of these things are unfolding, infrastructure is going to be something that's going to be needing a lot of attention. We talked about Internet of Things and a lot of other things here. There is a report, nobody knows the numbers quite for certain, but the estimates currently, I think Gartner is saying that in 2015 there were about 5 to 6 billion connected devices in the world. Okay. How accurate that number is, I don't really know, but the same company predicts that by 2020, so just in 4 years' time, it would be 20 billion connected devices. That's quadruple the number of devices. Okay? A lot of these devices are going to be transaction-related devices. Maybe not all, but a lot of them will. You can imagine what that means to fraud and risk specialists. This is a major area that needs to be addressed. And already people are deploying some of the technologies I mentioned earlier, such as machine learning and AI, to try and combat the potential rise of fraud and fraudulent transactions and fraudulent attacks that are happening. Just in the last last month or so, I think you all have read about this attack that was organized through connected devices in the US on the East Coast. I think they took down Twitter and a number of other major sites for a whole weekend. How? By infecting with malware connected devices such as CCTV cameras and everything, and basically instructing them all en masse to start a denial of service attack on Twitter and a couple of other websites. A lot of these devices going forward are going to have a payment function in them because people are wanting to simplify the payment process and implement a payment function in them. You can imagine what this is going to be doing to the fraud element in the whole ecosystem. There's going to be a lot of activity here on either side of the fence. The fraudsters trying to break it, the risk analysts trying to control it. That's here. And I left the last piece here, regulation. I think at the kind of a recurring theme here, everyone's talking about regulation and how this is going to affect everything. But regulation is actually a major trend, and especially in the European Union, that we've heard that European Union kind of has a tendency to regulate, for better or for worse, it does. But payments is actually one of the areas that's been addressed quite heavily by the European Union in terms of regulation. PSD refers to Payment Systems Directive, and that's one of the regulatory elements, one of the regulatory initiatives that the European Union introduced a few years ago. And actually, it's one of the areas where the European Union has actually done a good thing in terms of addressing certain market requirements and opening the market to more competition, allowing startups and fresh initiatives to break into what was once a very closed club of financial institutions in their individual countries. PSD2, which is coming into effect next year, is taking this a couple of steps further. It's breaking down the relationships between financial institutions a little bit more. It opens up a number of different fields for potential disruption. And I'll give you one brief example. There is one part of PSD2 which is called access to account. What the EU is regulating is that the banks will actually be forced to open the access to the account of a consumer that is a customer of theirs to the outside infrastructure, to the outside world. So if you are a client, or if you have a company that's offering a service that has a different wallet, I, the consumer, could designate my current account at Bank X, let's say Bank of Cyprus. Okay? I could link my Bank of Cyprus account to that payment instrument so that I can complete my transactions without actually having to even ask Bank of Cyprus about it. Bank of Cyprus keeps my money. Yes, I have a banking relationship with them, but I don't have to ask their permission to link my current account to an outside instrument that I'm going to be using to performing transactions. So, and that is actually part of PSD2 regulation. How this whole middle ground will unfold, I think this is prime area for startups and innovators to actually form solutions that are of interest and disrupting the whole financial relationship between consumers and banks. And just as a final point, it's one of the areas that I believe the local authorities, the local regulators really need to be looking at, really need to be proactive, take a leadership view, create a framework to regulate this, because there's a lot of activity going to be coming this way in the European Union. And if we have the right framework, a lot of activity could potentially be based in Cyprus in order to regulate within the EU environment. So with that, I think hopefully a hopeful message, I will finish my piece.
Thank you very much. Very interesting. Do you have any questions from the audience? Yes, Michalis.
Thanks for that, Michael. It was very insightful. My question is, you made extensive reference to artificial intelligence. And I happened to have a chat recently with a product manager in payments in Google in Mountain View. Okay. And the way Google approaches it, for example, is a hybrid model between a rule-based model and a machine learning model. So the AI algorithm will trace a pattern if a fraud exists, but then actual human beings will assess the case. In your opinion and your experience, do you think that machine learning will overtake this whole scene altogether 100% anytime soon?
100% no. Well, it depends on the type of activity.
Yeah, and how do you see that model working?
I'll give you a couple of examples. We know, and we've already working, we've seen examples in action where, for example, the fraud-related activity, where you could actually see fraud monitoring and fraud prevention activities entirely handled by machine learning without human interference, because those are split-second decisions, and when you're handling massive amounts of data, waiting and anticipating a human interaction before a decision actually takes place is just way too late. So you may, and that is a space where you already see it. So AI and machine learning getting trained based on your massive amounts of data that you have to respond, reviewing not a transaction, but what one would call an authorization request. So potentially preventing a transaction from even happening, okay, because it has triggered a number of different alerts in an AI environment and a machine learning implementation, if you will. So in that space, I can potentially see being entirely automated and not even needing human intervention. Human intervention will come in the form of retraining the model, but the model would be left to potentially take the entire decision in that space. Now, if you look at other aspects, for example, origination or application processing, if you will, one area, you could break that into a number of different pieces. So the obvious cases, the clean-cut cases, for example, if you take them through an AI algorithm, and 60% of the application cases are clean-cut and kind of a no-brainer. They will be approved by the algorithm. Then there would be a part that is kind of in that gray area where potentially, a human interaction would be required to complete that transaction, either positively or negatively. So, you may want to have a human assess the situation and take an insightful decision at that point how to handle that transaction. So it really depends on the case, but I don't see all of the activities going to a bot world, if you will.
Any other questions? Yes, Angelos.
Thank you, Eleftheria, and sorry for giving you a workaround. Michalis, I'm wondering, you've mentioned a lot of mediums through which payments will occur, and in so many ways that the payment environment is changing. I don't know, I think a lot of people feel very sensitive about their money. I think it's only natural that, you work so many hours a day and you earn some money that you want to spend. If there isn't, let's say, a uniform regulation for all these platforms, do you think people will ever fully adopt them and trust them to use their money, or do people need that comfort that there is a global standard of security across a number of platforms doing intelligent payments?
Achieving a global platform, that's a bit challenging. If you're asking whether this will encourage more electronic activity and let's say a move to a more cashless society, I think that's inevitable. Whether it will go to a completely cashless society, I think there's some other concerns that first need to be addressed, and I think the most fundamental one of those is the one of anonymity and privacy, personal privacy and data privacy, and that has become kind of the flag-bearing mission of a lot of libertarians, if you will, because the protection of the individuality versus the convenience of the technology. Some countries will move there, others will have much more of a challenge in getting there. So I don't think you're going to have a uniform solution there.
Yes.
Angelos asked about us, the customers. I'd like to extend that question about the businesses. I'm in the hotel industry. The company I work for, we manage hotels in Cyprus and Greece, 20 in fact. And probably one of the biggest problems or reasons why we haven't adopted technologies yet, like PayPal, etc., is always this question at the back of our minds, what about fraud? Who secures us? Who makes sure that if something happens, we will not lose our money? Because we're not talking about 50 euros here and there. I mean, a guest paying for a holiday is maybe paying 3,000, 4,000, 5,000 euros in one transaction.
Yep.
That's from one guest, and we have maybe, 10,000 guests a day. So that's a huge number. I don't know how you feel about that, and whether you see something specific on that front in the future.
Look, what I can say is that you really need I think you really need to do more of an in-depth analysis of, first of all, what you need, and look for an appropriate partner. There are partners out there that have the depth and and integrity that you're looking for. There's a lot of companies that can provide services and that handle, billions of euros. So yeah, I mean, you would be one of several customers of that magnitude that they would handle. I mean, PayPal is not the only answer there. PayPal, in your case, would be potentially quite an expensive solution to integrate into yours. But to take your point about fraud, I mean, there's a couple of ways that you can do it. You could potentially also implement some internal solutions to manage and screen some of your own fraud. I mean, companies of your size, quite often, retailers, as an example. Let's say a retailer chain that has 800, 1,000 stores. They have the same concerns. They handle millions of transactions on an annual basis, hundreds of millions in terms of revenue. So potential fraud there can be very disruptive to the business, detrimental to the business. Some of those people actually implement in-house monitoring solutions to make sure that they stay on track and that they don't fall in a trap. Likewise, there's a lot of serious payment service provider companies that can provide you also with tools and access to your activity so that you can monitor also yourself and they can monitor it in a more customized way to see what you want to address your concerns. Because it's kind of a double-edged sword. You want to make sure that you don't fall for a fraudulent 5,000 euro transaction, but at the same time, you're not really keen to turn away 5 good 5,000 euro transactions because you're too scared to take them. So there's a fine balance between managing this process. And all I can tell you is that there are a lot of solutions out there. You just need to make sure that you find the appropriate one.
Thank you very much. Just one last question from me.
Yeah.
Do you think, you've mentioned the blockchain technology, and we were discussing the other day with Paolo and you about the distributed ledgers technology now discussed at the European level. Do you think that banks will eventually will embrace this blockchain technology, or will they be forced to actually implement it? Is it to their interest to switch to this?
Yeah. I think blockchain will certainly become a mainstream. Not sure when and in which areas. Probably not so in the real-time payments for the time being, because there's a real challenge of scalability there for blockchain. But there's a lot of activity that blockchain can handle that can actually solve a lot of cumbersome and costly processes for banks. It may not be directly in payments, but there's a number of applications. I mean, and a lot of banks are investing some serious time and money in investigating this, which really implies that they have seen that the potential end of the road can be a very rewarding one. They just haven't figured out yet what to do with it, and we're going to see commercialized solutions, I think, within the next 5 years, for sure.
Okay. Thank you very much. Thank you. Yes, thank you, Michalis.